All right. Matt, the mortgage guy. In today's video, I'm going to talk rate buy down strategy. If you're in the market to buy a house, whether it's a primary residence or an investment property, and you continue to see home prices go up and rates go up, and you think to yourself, that's not a payment I can afford, or that's not a payment that fits into my budget, stay tuned. I'm going to show you how to save hundreds of dollars on your monthly mortgage payment with no extra cost out of your pocket. All right, Matt, the mortgage guy. In today's video, I'm going to go over rate buy down strategy. You may or may not have heard of it. I remember it gaining some popularity in late 2018 as rates had gone up. Folks were finding ways, in an affordability crunch to lower their monthly mortgage payment in a rising interest rate environment. So in 2022, this strategy is making a comeback. I think it will be especially effective in an environment where sellers have less and less leverage, are more apt to give concessions. And in this case, that concession from the seller will make your monthly payment cheaper with no extra cost to you. Okay, so as always, I try to make it simple. I think with examples of real life numbers, it makes it easier to understand. Know that you can always reach out to me and my team. We're more than happy to help get you pre-approved, show you some scenarios, kind of coach you on this program, talk to your realtor about how to do a rate buy down strategy. So go to greatmortgagebroker.com, fill out the form, connect with us there if you would like to discuss this further or get pre-approved with us, have us connect with your realtor and talk with them about it. So real simple. And again, this isn't an offer to lend. This is just me showing you random scenarios. So don't take this and say, hey, you offered me this or this rate. NMLS number 1088993, all that good stuff with disclaimers, but just based on a primary residence purchase with 5% down. I'll put this up on the screen. You might be getting a rate somewhere in the neighborhood of 5.875 as your primary residence, $500,000 purchase, 5% down. So you've got a loan of $475,000. Principal, interest, taxes, insurance. These numbers are based on California taxes. Taxes might be different, whatever part of the country you live in, but the payment is $34.89 a month. That's inclusive of everything, taxes, insurance, and mortgage insurance. Now, you might be in a position where rents in your area are $3,000 and you're saying, listen, I'd love to buy a house. I've got the down payment. I can afford it. $3,500 is stretching my budget. I don't know if I want to do that. How do I get this payment down? Well, a real simple strategy, the rate buy down strategy, is just basically paying points to buy the rate down. Where I think this strategy becomes really, easy to execute in 2022. Let's say you've got a seller who put their home on the market and they haven't got any action for 2 weeks. All you have to do is have your agent write the offer for $500,000, seller credit of $9,500, which just so happens to be 2% of your loan amount. That'll be important. We'll get to that later. $9,500 seller credit. Now, when you go to buy the house, you don't spend any extra money out of pocket, but that $9,500 in seller's credit can buy the rate down by 2 points. What does that get you exactly? Here's the example. You go from 5.875 to 5.125 on interest rate. Now our taxes, insurance, mortgage insurance, and principal and interest total payment all in is $3,266. You save $223 a month. Nothing else in the loan changes. The $9,500 in points that gets charged to you actually gets offset by that credit from the seller, hence saving you $223 a month. Some might add, well, why don't you just lower the purchase price by $9,500 because the seller's going to net $9,500 less? I can tell you what happens in that scenario, and I'll plug these numbers in real quick. If you got the house for $490,500, but kept that rate at 5.875, your payment would still be $34.23. You wouldn't get the monthly payment savings. And you know, and I know, that monthly payment is important to folks. That's how you figure out your budget. So that's that rate buy down strategy on a primary residence. I'm going to real quickly go over the same exact scenario where you might be buying an investment property. And investment properties, similar to primary residence, you're going to find, especially through the second half of 2022 and through 2023, sellers in a position to negotiate more. Demand is down. We all know that. Some stat I just saw where there's 18 million home buyers that priced out and could no longer afford to buy. This actually might help some of them afford to buy that thought they were priced out, but those who aren't priced out, this is a good strategy nonetheless. Let's say that you're looking at a home for $500,000 and on an investment property purchase, you're putting 25% down. So you have a loan amount of $375,000. Well, with an interest rate of 6.625, principal, interest, taxes, insurance, all in payment, $3,005. If you're a savvy investor, you've already done all your research. You know what this place is going to rent for, how much vacancy you can expect for, what capital expenditures might be, and all that good stuff, right? So you plug this in and you say, listen, $3,000 isn't going to cut it. It's going to be a break-even property. I'm not going to buy it if it's a break-even. I need $200 or $300 a month in cash flow for this to make sense for me to come out of pocket for the 25% down payment. Okay, well, maybe this property has been on the market for 27 days and you know that you can negotiate with the seller. You go to the seller and you offer that same $500,000, but with $11,250 in seller credit. That just so happens that $11,250 is 3% of your loan amount, not of the purchase price, which they can give a credit up to 3% of the purchase price. But for this scenario and for this example, I'm just using 3% of the loan amount. You offer and you get accepted this $11,250 in credit. You can buy your rate down all the way from 6.625 on this investment property to 5.375. Lowers your all-in payment, taxes, insurance, principal, and interest to $2,704. So what you've done by getting $11,250 in credit from the seller, and it's just part of the contract, the seller to credit the buyer this much, and then you apply that towards your rate buy down, is you've lowered your payment by $301. The new payment is $2,704. So in an environment where you can actually get sellers to concede, to give a credit, you structure an offer like this. They haven't got any offers at $500,000. So rather than come in at $485 or $490 and see if you can get something accepted, you say, listen, I'll give you your $500,000, but I need $11,250 in seller credit. That's how you structure the offer. When you get it accepted, if you choose to use that seller credit to buy your rate down, here's what you can do. In this example, you buy it down quite significantly to 5.375. In a primary purchase, the examples we used, you went from 5.875 to 5.125, and you lowered that payment by $230. If you've got bigger loan amounts, you can ask for bigger credit, and you're going to get a bigger monthly payment savings. If you've got lower loan amounts, then maybe the monthly savings isn't as dramatic, right? But nonetheless, it works the same. No matter the loan amount, no matter if it's primary or investment, no matter what market you're in, this is a strategy you can employ. Any questions at all, please feel free to reach out. Again, greatmortgagebroker.com. Fill out the form. Let us know where you're at, how we can help. I'll try to make this Excel spreadsheet available for folks who want to see it. But it's rather simple, right? You're getting a seller credit to cover the costs to buy down the interest rate. That's essentially what it is. Hopefully this was helpful. Thanks for watching. Appreciate you. Smash the like button, share this video, do all the things. And until next time, we gonna see.